Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, October 26th. Firstly to the S&P 500, and here we've seen formation of a black body candle as opposed to the white bodies of the previous two trading days. Previous two trading days were very bullish candles, taking out the important resistance around the window that was opened up some time ago and breaching to within the highlighted yellow zone of support and resistance, the market testing just to the top of that zone. Today there's been some rejection from that area, but on a very small black body candle, so we have had a switch in momentum in net terms between the open and the close away from the buyers to the sellers, but it certainly isn't significant enough to suggest that we are going to see strong selling in this market. Importantly, what we've seen is the sellers failed to take control. However, we have seen the buyers lose control, and with the previous two candles, the market closing up towards the highs suggested that buyers had strong control. Here at the moment, we've closed just around the midpoint level, suggesting that neither the buyers nor the sellers have closed with control. Now that does suggest that there is a possibility of a change of trend, but it certainly is suggesting also that there isn't any strength from the sellers. If we do see a change of trend, looking to the window that was opened up here between 2079 and 2041 to act as very strong support for this market, and if that area is breached, we could end up seeing the market test down to the bottom of the highlighted zone at 2040. If the buyers are strong enough and if they can come back into this market, we could see a test back up to the top of this zone around the 2080 level, and a strong bullish breakout up above there could see the market continue to trade higher significantly to around the 2100 round number level. In terms of Ichimoku, we are bullish in all three timeframes, but just watching the Chikas band, it has started to point flat. So that upside momentum that we had previously is no longer there, and price action can be attracted back towards a flat Kijun-sen, so there is a possibility of that change of trend occurring. The market is looking a little overextended in the depth away from the Kijun-sen, so something of a retracement wouldn't surprise. And let's look at the character of the retracement if we do see that, and looking for support to come in either at the window or at that 2040 level. Just looking at the bands here with the S&P on the daily charts, and here we see continued price activity up above the upper band. They're both pointing up quite sharply, reflecting solid upside momentum, and also the trading up above the upper band highlights the strong bullish bias in the medium-term time frame. If we do see this market come off, looking to the upper band initially, 2049 to hold a support, and as we've seen here previously, we have seen one candle probe to within the bands and then the buyers come back into the market, so that's a possibility as well. To the Dow 30, and here we see a very small bodied candle suggesting that we have a small amount of net momentum to the downside. On this candle we have seen the sellers close with control by closing near the low, so a switch in control away from the buyers to the sellers. And we had also seen this small window open up previously, and that may hold as very strong support if the market can breach through the 17603 level, which has held as support today, and also down at the 17536 level, and a breach down through there could see the window come into play, but it may hold as very strong support. To the upside, we have very strong resistance at the zone of previous support and resistance, extending up to around the 17867 level. It has held as resistance for the previous bullish candle, and some rejection here. The rejection that we're seeing at the moment is rather weak, and this here is suggesting that we do see the buyers as being the stronger party still in this market at the moment. But just watching, if we do see a change of trend, watch these support levels very closely for the buyers to come back into the market and to test back up towards this zone. Next to the Nasdaq 100, and slightly more bullish candle here than we saw with the Dow and the S&P, a white body candle, and the size of the body builds on the previous, where the previous candle was a doji candle. Importantly, off that doji candle, the market failed to initiate a change of trend to the downside. We haven't seen the formation of a lower high and a lower low. Technically, the trend here is still up, and with the range of today's candle within the range of the previous, it does suggest that there still is quite some indecision in this market and a possibility of a change of trend to the downside. Now, if we do see any change of trend to the downside, we do have a very large window that was opened up previously, extending from roughly about 4.5 or from 4.598 down to 4.504 and down through to the bottom of that highlighted zone. So very, very strong buying previously here in this market. For the previous day's trading, the market found resistance at a previous window that was opened up, and that's around that 4.659 level. So if the buyers are strong enough, they can breach up through there in a bullish manner, we could see the market develop further to the upside, but we're likely to find very strong support if we do see any retracement. Now, we do have a bullish market in all three timeframes. The buyers certainly are in the ascendancy, and the inability of the sellers to come into this market, and the inability of them to take control of the market away from well, neither party previously, with the candle closing around the midpoint level, but the inability of the sellers to take control here does suggest that the buyers certainly are the stronger party. Next to the Russell 2000, and here we see this continued activity down below the Ichimoku cloud, as we saw a few days ago, and prior to that, a couple of days before that, the market testing down to lower levels. But as we see here with this congestion area that's going on, the market is making higher troughs, and we'll look at that pattern in a minute. But importantly, price rejection from the bottom of the Ichimoku cloud, with the sellers taking control on this candle away from the buyers of the previous day's trading. A small uptrend here, one candle uptrend, and a potential bearish harami pattern here, so looking for confirmation, and almost a hook reversal here, with the market opening around the high and closing very close to the low, suggesting a possibility of a change of trend. If we do see a trend change here, with looking for confirmation with a lower high and lower low, if we do see that change of trend, looking to the Tenkan-sen around 11.52 to hold a strong support, and then down around the 11.47 level. But the pattern that we were looking at here previously is still in play, and it's something of an ascending triangle. The problem for this being completed to the upside is that we have potential resistance all the way through to the top of the Ichimoku cloud, up around the 1189 area, and we're not likely to meet the target, which would be significantly higher than that. With the market trading down below the Ichimoku cloud at the moment, the most likely completion here would be a close down below the lower barrier, and for this to act as a reversal pattern, which is not normal. They normally, in an uptrend, the ascending triangles are continuation patterns, but in this case it certainly could end up being a reversal pattern, and that would be contingent upon a close down below the lower barrier. And just looking at the Russell 2000 with the bands here, and here we've seen the market finding resistance at that upper band continually, and if we do see the market attempt to rally, watching the upper band 1168, 1169 to continue to hold as resistance, or if we see any strong selling in this market, the middle of the bands around 1144 to act as strong support. Moving to our sector ETFs, and XLE is the first we'll be looking at. This has seen some very strong selling. It's the energy sector today. A very large black body candle, sellers in control, previously trading up above the Ichimoku cloud and now trading within the cloud. So potential for this market to transition into a strong bear phase. The activity up above the cloud previously, it was really quite distinct in the lack of follow through after the breakout, and we didn't take out the highs of that breakout, and the market failed around that level continuously. Now trading within the cloud suggests that we have a neutral market in big picture terms. In terms of the bands here, previous breakout, follow through, holding the upper band as support, then trading back to within the bands and failing to test up to the upper band. The pivot point reversal here is a strong sell signal, but watching the middle of the bands around 66, 68 to continue to hold a support. If we see continued selling as predicted by the establishment of a pivot point reversal signal, we certainly could see a test down to the lower band at 63.90. In terms of the relative strength, on the first subchart here, the relative strength comparative is trending down very, very strongly down below the lower band, and the momentum of that relative strength is now moving down below the 100% level and really accelerating to the downside. Another weak sector here is the utility sector, trading up above the Ichimoku cloud and the Kijun-sen, so still strong in the longer term and the medium term time frame, but trading within the bands on the band chart here on the right hand side, and suggesting that we don't have that strong bullish bias in the medium term time frame. In terms of relative strength, trading down below the lower band, and the momentum of relative strength is below 100% and accelerating to the downside, so we could continue to see strong underperformance. Formation of something of a hammer type pattern here suggests there is a possibility of a change of trend, but the buyers will need to be strong enough to breach up through the Tenkan-sen, trading at 44.77. And XLK, the technology sector, which was one of the strongest, here we see continued trading up above the upper band, and momentum of relative strength is still quite strong, trading above each of the Ichimoku indicators. So the technology sector, as we've seen with the Nasdaq 100 index when we looked at it, was pretty much the strongest sector and the stronger index in the overall equities market. Previously we saw some outperformance of the industrial sector, XLI, against the overall market. It is very strong on the Ichimoku charts, trading above each of the indicators here. Still strong on the band charts, trading above the upper band, so strong medium bias here, medium term bias in the that medium term time frame. And if we see the market come off looking to the upper band at 53.92 to hold a support, or at the Tenkan-sen 53.52 to hold a strong support, but in terms of relative strength comparative, now trading back within the bands, and still up above the 100% level on in terms of momentum, and just above the upper band, but flattening out, suggesting that we could see the strong performance that we saw previously in terms of relative strength not continue. Just looking to some stocks, and Paychex, PAYX, is continuing to be a strong performer, trading above each of the Ichimoku indicators on the Ichimoku charts, and trading above the upper band still. Buyers continuing with control in this market, and relative strength comparative is strong by trading outside of the upper band. And if we look here at the momentum of relative strength, it's above 100% and above the upper band and accelerating. SanDisk was a strong outperformer. It's now come back to within the bands. The momentum of relative strength is moving down, it's decelerating, and suggesting we could see a pullback here, but all looks well in terms of the Ichimoku chart and the band chart. But in terms of performance against the overall equities market, it's no longer strongly outperforming. Still outperforming, but not as strong as it was previously. Moving next to Facebook, and Facebook is a very strong outperformer at the moment. A very large white body candle, buyers in control, trading well up through the Tenkan-sen indicator, looking a little overextended in the depth away from these indicators, and trading up through the top of the bands here, suggesting strong bullish activity in the medium term time frame. Relative strength comparative continues to trend up strongly outside of the upper band, and momentum of relative strength continues to accelerate away, suggesting that this is one of the stronger stocks on the daily charts at the moment. Starbucks SBUX continues to strongly outperform. Over the last couple of days we've seen some good acceleration. A white body candle here well outside of the Ichimoku cloud and the Kijun-sen, looking a little overextended. Wouldn't surprise to see a pullback. The outside of the upper band, looking to the upper band 61.46 to hold a support if we do see a retracement, or the Tenkan-sen indicator here $60.96. But relative strength comparative is very strong, and momentum of relative strength is trending up strongly. Next to Chevron, CVX is the code, and here we see strong selling with this the market forming a black body candle. The sellers in control, the market opening at the high, closing at the low, the strongest type of bearish candle we can have. Sellers in control all day. Over on the band chart, we see the market rallying for the previous day and finding resistance at the upper band and selling off strongly today with a pivot point reversal sell signal. Trading down outside of the lower band now, and this market has transitioned from a strong outperformance into a strong underperformance, and the momentum of relative strength was tipping that some time ago here, with the relative strength momentum trading down below the lower band and coming back towards the 100% level, and now down below the 100% level, suggesting we certainly could continue to see a retracement here, looking to support at the middle of the bands around 87.